Hi everyone, welcome to this live event. How are you guys? I have been off for a couple of weeks. First one because of me, second because of technical issues. Anyway, here we are. The market has changed a lot ever since the last time we talked. So we are going to see what's going on and what we can expect from mayors this week. And with a bit of luck during the upcoming days, okay? Anyway, I'm sharing the full calendar today. There has not been much relevant data so far coming from Europe or from the US, not Monday, not Tuesday. And in fact, we are waiting for a quite quiet macroeconomic calendar for the rest of the day. I was thinking that the Schultz jobs opening may move a bit the market, particularly because we are very focused on whatever the employment sector in the US is doing. But actually, I don't expect much action coming up today from news. I believe that, again, the market will be led by commodities and stocks, right? We have a lot of earnings reports these days, and I believe that we have some big ones in the US. So pay attention to stocks before trading the currencies because we may see some wild movements coming from stocks and therefore some flips in market sentiment. Okay. Anyway, the one thing that is bothering me lately is that the pound has been suffering from very bad macroeconomic data. Actually, every news we had for the past 2 months, I do believe, coming from the UK was negative, and despite the pair has rallied for the dollar pair, has rallied for almost 3 weeks in a row, it has begun to retrace its gains because the rally of the pound has been unsustainable, right? I do expect further pound slides, to be honest, as the referendum looms. And keep in mind that this Thursday we have the Super Thursday in the UK, in the Bank of England, with minutes, rates, assets purchase program, voting members, and so on. The fact is that it's going to be a non-event for the most because I don't expect the Bank of England to take any decision a month before the referendum, right? We are all in wait and see mode until that happens. If you ask me my personal opinion, I have to say that I don't believe Britain will leave the euro area, but who knows? That's my personal opinion, okay? Anyway, and for these days in the shorter term, manufacturing and industry production data early Wednesday, I believe, will be the key because it's expected to have worsened, and it will be signaling that the economy keeps slowing, and therefore will wait on pound and keep it under pressure ahead of the mentioned events, right? Jumping on Thursday, we have industrial production figures in the euro area. This is not like it's moving much, the euro. In fact, European data has been modestly growing, right? And it has been having very little effect over the euro these days. I don't expect this to move much the market, but it will give us a sign of how the euro area is doing, how its economic health is doing, and therefore could give the euro support or not, of course. The Super Thursday, as I said, not changes expected from the Bank of England. And then we jump into Friday with Kuroda from Bank of Japan talking. The Japanese yen has recovered pretty fairly these days, in spite the dollar employment, the American employment report released last Friday was not that good, right? The fact is, if you ask me, and to be honest, I do believe that the market has unsustainable hopes of a June rate hike in the US. Nor data, nor Fed members' comments support such. But anyway, that this latent hope in the market that the Fed will actually rise rates at least 2 times this year I'm thinking on June and December because we have September's close to the September. Yes, elections in the US close to the September meeting, and therefore they will stand on hold. That one, it's keeping the dollar bullish, sort of, for the past week or a week and a half or so, right? Still, I don't believe that it has background, such hopes, but there we have it. And I'm matching this with the Bank of Japan Kuroda speech because the Bank of Japan has been largely moaning about intervening in the market, about the concerns about Shen's strength, and the fact is that anything he may say or not say on Friday will be far from enough to move the yen, right? It will be, if it happens, a short-lived spike either side of the board as usual. But what is actually lifting the dollar Japanese yen, what is actually weakening the yen, is not whatever Kuroda can say or the Bank of Japan can do. It's exactly those unsustainable hopes on a June rate hike in the US. Okay. Then also on Friday we have inflation in Germany. To be honest, that in Germany has been quite positive, and I do believe that's one of the reasons the euro is finding some support in these moments that the dollar is back across the board. And that's one of the reasons I don't believe that the euro is still ready to give up ground more strongly. Sorry, too many times, too many weeks without speaking English. Anyway, back to here, GDP readings also in Germany. I do believe this will be key. Both German readings will be key for the euro, and we will have an interesting end of a week, particularly because Europe will also release the GDP. It's a revision, right? So we are going to see how it comes, but it's expected to match previous, so not a big surprise in there. This is the most relevant figure we will have from the US this week. In fact, pretty light calendar. Retail sales have been quite disappointing lately. In fact, every single data coming from the US has been disappointing over the past 4 months, and these April readings we are getting on lately are pointing for an extension of the slowdown into the second quarter, which is quite negative for the greenback. So that's why, despite the ongoing strain of the dollar, I can bet much on further dollar recoveries at the time being. Okay. Uh, then over the weekend, we have data coming from China. Data coming from China over the weekends is usually quite relevant, particularly depending on how Friday closed. If a market is trading purely on sentiment on Friday, let's say, weekend data will probably exacerbate those moves at the beginning of the next week, and therefore give us some gaps at the new week opening, right? Don't expect these particular readings to be that much relevant, but there is a possibility that they can do that. Okay, so beware of that. Anyway, let me change and go to my charts, which is far more interesting, sort of, because not much going on in the euro, right? Anyway, earlier today I wrote a piece saying that the euro has a neutral to bearish stance, and I do still believe so. The pair is struggling right around the 61.8% retracement of its latest bullish run between 12.15 and 16.15, 400 pips exactly. Right, 1370 is the 11. We have a low right now down to 58, 12 pips and back up. But generally speaking, the tone is quite weak in the pair. I'm seeing that the 20 simple moving average at souths above the current level. Indicators remain in bearish territory, but with no clear directional strength. So for the most, I'm expecting this downward move to extend down to 113, 113.30 the most. I'm not still convinced that the pair can take down 113 so easily, because there's not much of a dollar strength going on in the market. So maybe we can see a recovery from here, but still I would like the pair to break above 1420, which if you take a look has been this week high, and the 50% retracement of the same rally to talk about bullish movement. 1460, of course, we talk long about that level. It's the next target, and above it 1520, 1530 comes next. But still, market needs a strong catalyst, and it seems unable to find it, right? When it comes to the pound, uh, this is the weekly chart, right? We have that big rally and the pair now retracing partially, but still we have stalled the decline or the downward corrective move around the 50%, and also it's stuck in range. Since the week started, like the euro, not much going on in here, trapped in between Fibonacci levels with a mild negative tone. Positive trade balance earlier today has helped the pair to spike briefly above that 44.50 region, but I would like to see a candle opening, at 4 hours. Candle opening above this level to talk about a stronger corrective movement, which can reach 45, 45.20. Okay. On the other side, if this low around 43.70 gives up, I do believe that the pair has scope to test 42.50. This area, right? Where we have a major long-term support, and where I do expect some buying interest to came back, right? But overall, the risk is towards downside, at least from a technical point of view. And you'll see it's also in a Fibonacci, but this case is different because this is this year rally, right? This year rally that has taken the pair close to 78, right? And all of a sudden, the surprise rate cut and the possibility of further rate cuts coming from the Reserve Bank of Australia are keeping the pair under pressure. All hell broke loose in Australia when we had the release of the first quarter inflation figures, right? Inflation was very, very weak during the first 3 months of the year, and that the immediate reaction to that low inflation was a rate cut, right? So beware of that coming from China, as if it's weak, it will probably mean lower inflation in Australia and therefore further slides in here. Anyway, I still believe that a top has been placed, of course, and despite the pair is currently struggling around that Fibonacci level because of a sharp decline, there is still scope for further slides, okay? If we take the low, today it's set at around 73, I would expect the pair to extend this rally down towards the 72 region with not much in the region, in the middle, sorry, in those 100 pips. And even extended this decline down to 0.670, where I do believe the Bank of Australia will be feel much more comfortable. I don't remember if it said it, but the market is already thinking or speculating on at least 2 more rate cuts in Australia in between June and August. I do believe it's a bit exaggerated, but I don't discard 1 more rate cut. Okay, so beware of that, because if we had 1 more, that will have also some bearish effects in the pair, but the third one won't be so effective to convince traders that the pair will slide. And if the US fails to raise rates in June, I know we are a month away, but anyway, the USD will probably recover sharply, right? Beware of that. It will be more relevant whatever the US central bank decides that any rate cut that Stevens provide, unless of course he decides to get, I don't know, 50 basis points in 1 day, right? A surprise move and leave all doors open for further rate cuts. But anyway, bearish, okay? Sorry. And the dollar to concern, well, we have been talking about this a bit, of the recovery coming from speculation or from Fed action rather than whatever the Bank of Japan can do. Okay, but if you take a look at the daily, the recovery has been quite tepid, and it's still far from confirming that the pair is reversing its way. We have these highs in the 12th area as the first midterm target. And I do believe that unless we get above this 1460, 1480 region, there's not much to say about a bullish continuation. Okay, those are the levels to watch. Those are the levels to break to keep on rallying in a more sustainable way. Anyway, and short term, the outlook is actually bullish. I do believe that we can go up to 110, particularly if we take these highs around, sorry, this one's around 970, 100, 970 is the immediate resistance, and we can go up to there 110 and above that up to 1060. If you take a look at the daily, we have multiple lows and highs in around that 1060 region. So this is for me a major resistance and the probable bullish target for this ongoing move for the upcoming days. I don't see a pair breaking above this one, to be honest, this week, but we can get up to there. And these lows in the 107.60 region are the support to watch, because the pullbacks down to that level may attract some buying interest, but if the level gives up, well, the market will try to retest 105 again and challenge the Bank of Japan and say, okay, let's see if you're able to intervene the market. We had a wild slump in oil, in gold, sorry, after testing 1300, right? The commodity was over 20 bucks yesterday, which is pretty sharp, but still, the long-term outlook is bullish for gold. Whatever happens in here, of course, is again depends from the Fed, right? Hopes that the Fed may act are keeping it down. Hopes that the Fed won't act are pushing it higher. For me, to be honest, there are no chances the Fed will act in June. Very, very limited one, which means that at some point the gold has to turn back higher. I'm relying mostly on this trend line around 1230 for today and these days. And I do believe that as long as we hold above that level, bulls will keep control of the commodity. Okay, so keep an eye on any incline towards that level to be a buying opportunity. This previous high in 1283.50 is the resistance. I believe that if we recover back above that level, the commodity can retest 13 and even go back higher. And when it comes to oil, the fact is that we had a nice recovery, but now we have entered a consolidated stage. The background is not good, guys. The background, the background. It's always about the background in oil, right? We have more supply than demand, and uh, we have been hoping for the OPEC to freeze production for I don't know over a month, and when the meeting finally came, uh, they did not come to an agreement. And furthermore, this last few days, we knew that they have reached record high production levels during April, right? So it's all a big force what's going on around policy, not only when it comes to oil, but anyway, there's a bit of turmoil in the market these days because Arabia Saudi has replaced its oil minister, and we have that terrible wildfires in Canada in the oil sands. So the market is unclear on whether we have higher production, sorry, in one hand, and lower and a shutdown in Canada because of the wildfires. So the market is not clear of where to go. But what I can take from the chart is that the price would probably hold about 40. Once again, as I've said plenty of times over the past weeks, I don't believe we are going to see 25 again. At this point, it seems we are going to stabilize near 40, 50. Sorry, I do believe I'd said this a couple of months ago, and I still will go with that. In fact, we'll reach 46. So, and then retreat a bit, but honestly, not seeing much of a chance of a big slump towards 25. Right? It's not likely. Anyway, below 43.20, which is the immediate support, the commodity can go down to 42, 42.50, which is the next support level to watch. And on the other hand, we need to take back 44.30, 44.50 area, right in between around this level, to see a more constructive outlook and see a recovery back to 46. Uh, we have today the US AP report, right? But I do believe that it will take until Thursday to see more definitions with the stockpiles report coming from the US, right? So that's what I'm looking for in a year. And the Canadian dollar, the Canadian dollar, I hardly take a look at this particular pair because it's generally trading with the of course with oil. But anyway, I have been watching this daily chart because this sharp bearish trend seems to have come to an end, right? We have broken above the daily descendant trend line, and I know I don't have it, but there it is, right? And we are posting higher highs. We reach this area and there we are stuck, but I do see the possibility of the commodity to recovering up to 32 without oil being so badly affected, right? Still, I do believe the market is trading them in tandem, so I won't be playing much with the Canadian dollar without looking at whatever happens with oil prices, right? Unfortunately, but technically, the pair is poised to rise regardless of what we have in here. Maybe the market will get tired at some point to play the cat only within following crude oil prices, right? Anyway, guys, I do believe that's it for today, and hope you enjoyed it. And see you back soon in a week. See you back again in a week. Okay, thank you and bye bye.